Showing below are the financial statements of Kobape Limited for its most recent 2 years. Extracted from the statement of profits are the revenue, the cost of sales, the gross profits, administrative costs, distribution cost, financed cost, loan note interest, statement of financial position, non-current assets, current assets, inventory, trade receivables, cash balance, total assets, equity and liabilities, ordinary share capital, retained earnings, non-current liabilities, 10% loan notes, current liabilities, bank overdraft, trade payables, taxation, total equity and liabilities. The following are the ratios calculated for Kobape Limited. So they calculated these ratios: net profit margin, ROAS, asset turnover, current ratio, quick ratio. Now it is actually for 2018 an average industry, like industry average, that they calculated. Accounts receivable collection period, accounts payable payments period, inventory turnover times gearing ratio. So we have these ratios. They now say you are required to calculate the cash operating cycle of Kobape Limited for the year ended April 2018 and 2019. That is A. So we'll go and look at the inventory working capital cycle, cash operating cycle. Now it is simple. For accounts receivable collection period, the first one is for 2018, while the second one is for 2019. Now the account receivable collection period for 2018, account receivable collection period is 40 days. And we calculated the one for 2019. And that 2019 one is 50 days. You know the formula. The formula remains trade receivables all over sales times 365 days. So if you take the trade receivable of 2019 and take the trade receivable of 2019 and divide it by the sales of 2019 times 365 days to give you 50 days. So this is for 2019. Now for 2018, you'll still put 2018. The one for 2018 was already given to us. So since I've already taught you how to do it, so no need dissipating energy on calculating, showing the working. So you just work it out yourself. Now inventory holding period for 2018, they gave us inventory. You can see it, inventory turnover times, which is 13.9. But this can be calculated, using our inventory all over cost of sales times 365 days, both for 2018 and 2019. You see, that is what we did here. So I actually did for 2018, which is 26 days. Then you also do for 2019, which is 28 days. If you add them together, it will give you this and this, as the case may be. You now get your accounts payable payment period. The one for 2018 was given. You can see it. Accounts payables payment period, 37 days. So you bring it down. So you now calculate the one for 2019, which is 32. You minus, you have cash operating cycle, which is this. So you already have your 5 marks. Now the next item which is B. B says calculate the comparative ratio to 2 decimal places. Now comparative ratios is calculating the comparative ratio for 2019 for all this. So you will do net profit margin for 2019, ROAS for 2019, asset turnover for 2019, current ratio for 2019, quick ratio for 2019. You know the formulas. Gross profit margin for 2019, account receivable collection period for 2019 and all that. Now in my solution, which is B, you see it, computation of comparative ratios. We did it like this: gross profit margin 2019 2018, 2019 2018. So we have gross profit over revenue times 100. You see, I did it for 2018 and 2019. So I showed the workings, I showed the answer. So this is how you do the table. Now return on equity, I also computed for 2019 and 2018. You put the formula PBT all over ordinary shares. So these are things you will do on your own. Now after that, we look at C. C say you should draft a report addressed to the board of directors of Kobape Limited, analyzing the performance of the company for the year 2019 based on the results of the previous year and the industry average. Now, looking at this, we'll consider the interpretation of ABC and also the industry average. So this is how you draft a report to the board of directors. We did this last class. From the chief accountant. Ref, then we have date 1st August 2020. Subject, analysis of the company performance based on industry average. So you'll be comparing the industry average with the ratios you computed for 2018 and 2019, and you'll be telling the management what is wrong. Are they doing well in that aspect of the ratio indication or not? If they are not doing well, why are they not doing well, and what they can do to improve on this? So this is a report that analyzes. If you first introduce in your first paragraph, I've told you that your first paragraph will be an introduction. Then your second paragraph, you talk about the profitability ratio. You know what are profitability measures. The first one is net profit margin, gross profit margin, and all that. So you look at those things appropriately, then you interpret while comparing. I've already interpreted this in the notes, which is already there with you. So go through the notes and also work out one or two. This is actually the last class on analysis and interpretation. So we will be doing again consolidated financial statement for the second time. I've already done it before, but we'll take it again for more or less a revision. Thank you for attending. So read the note up, and if you have any question, you drop. It's actually a short class today. Thank you.